Hello, everyone. Welcome back to the channel. Matt with Green Bar Trading. Welcome back to another weekly watch list video. In this video, we're going to go over everything that you need to know for the week ahead. Before we jump into it, hit that thumbs up for the video. If you are new, consider subscribing. All right, so we're going to start where we start every weekly watch list, and that's with the earnings. So up here on the screen, these are our earnings for this coming week. You can obviously tell that there's a lot of earnings. We have seen a lot of earnings playing out over the past couple of weeks. Some good reports, some not so good reports. So this is always a time of the year that can move the markets based on what the company's guidance is, not necessarily what the earnings report shows. Although you would always like a beat on the top and the bottom line, but you want to know what is coming into the future, right? The stock market is always looking forward. Just keep in mind though, if you do trade any of these stocks with options, you're going to be paying a high premium. So a lot of people that might trade through earnings and they get a nice move in their favor, they wonder why the next day it's not really looking so good. And they are not making as much as they thought they would. That's that IV crush. So you're paying a huge amount of premium for those contracts, and that premium gets totally wiped out after the earnings report. So you got to remember that. You want to take strikes that are pretty close, even though you're paying for them, because you want that move to be well into the money. And that's the way that you should be trading options. If you do trade through these reports, which I don't recommend doing anyway, because it's hard to tell, which way a stock is going to go on a daily basis, let alone what the earnings are going to show. It's a total gamble. So anyway, that's my 2 cents about trading, through earnings, and just realize you're going to be paying a lot of premium. So that's our earnings. Okay, now we're going to look at the sectors for the week. Those sectors that did well, the sectors that did not do so well. So on the week, right here, communication services and technology, again, outperforming. Energy, utilities, these defensive type of plays are not doing well. So what did well last year is starting off not doing so well in 2023. What didn't do so well last year is doing well, obviously, for the first 5 weeks of the year. Will it continue? I personally do not think that that's going to continue. I think that we probably saw technology and the Qs. It had a nice move. I do think that we're going to start to see a bit of a pullback. All right. And we saw that on Friday. So will it continue? Who knows? This is just my opinion. So that's the sectors. Now we're going to go over to the economic calendar, which is so important if you're trading. I can't stress this enough. You need to know, especially in these markets, when those big economic data are coming out. Very important. So let's go over what we saw last week first. We had the FOMC. All right, that was on Wednesday. We had Powell speaking at 2:30, which kind of sounded pretty dovish, and that gave the market a huge rally on Wednesday. It gave the market a huge rally on Thursday. And then we were so overbought. And this is when I got into puts at the end of Thursday, looking for a quick RSI pullback. That's all I was looking for, and actually had a great trade on that. Now, Friday, we had the payrolls. Now, this is what is really mind-boggling, how you can have an estimate at 187K and get 517K. That's a massive beat. Huge beat. Huge beat on unemployment. We saw the labor force participation rate coming up also. It's just showing a very strong labor market, a very, very tight labor market, which is great. That means that the economy is doing well, that businesses are still hiring. The demand is still there for labor. That's a good thing. But for the Fed, it's not the best thing to have huge beats like this. It just goes to show that the Fed is just going to have to, to keep the rates there. The pivot, the cutting of the rates, I mean, really non-existent after a number like this. Now, there's going to be many, many more reports in the next couple of months. So, while this was one report, it just is still showing a very tight labor market. So the stock market on Friday had, even a bigger gap down. The market sold off pretty decent, tried to rally, and then came back on down. So, it's still the same case. Strong labor and weaker inflation, which is good. And that's what we're seeing so far. Now, this coming week, a very nice, quiet week, a beautiful, quiet week of economic data. You have on Thursday the initial jobless claims. That one will move the markets. The jobless claims Thursdays have been moving markets, so I would be aware of that. Other than that, a nice, calm week. All right, just a lot of earnings reports, which is totally fine. Now, the bond yields. What did we see after that really, really, really strong labor market data? We saw the yields jump up. That will always happen when the market gets data that's not great for the Fed. The yields will jump up, suggesting that the Fed is going to have to keep those rates higher for longer. So that's why you saw the bond yields going up. And when these go up, the stock market usually comes down, especially the NASDAQ market. All right, so that's the bonds. Next up, our compass. We're going to look at the SPY. Now, as I do with every weekly watch list video, we're going to look at the SPY. We're going to do technical analysis on the Qs, the DIA, which is the Dow ETF, and the IWM, which is the Russell 2K. We're going to look at those major indexes, and then I'm going to show you some charts, some stocks that I'm going to have on my watch list. Some nice technical setups to give us a possible move. Now, it's up to you to look at the charts, do your own due diligence before you ever take a trade. So just keep that in mind. But let's start right here with the SPY. Now, these key levels and everything that we look at, I don't have the key levels on here, but in our Discord community, every single morning, I will put those key levels for the SPY, for the Qs, for the ES, for the RTY, which is the Russell futures. And I'll post those every morning because we want to see where those key levels of resistance and support are. So if you're interested, that Discord link will be down in the description for you guys if you're interested in joining that community with us. So getting back to the SPY, this is what I'm seeing. Now, I have up, which on the daily chart, I always have the 200 SMA, I always have the 50 SMA, and then I have the 20 EMA, all right? These are my three key indicators that I use, along with a very important indicator down here, which is the RSI. That's the relative strength indicator. When you hit up here at 70, which we did on Thursday afternoon, which is why I got in puts. When we hit up here, that means that the market is overbought. You can see we hit it back here in the summer and it sold off. Now, when it's down here, this means that it's oversold. All right. When something's oversold, buyers will step in, and then we saw a nice rally. So I always like to look at those indicators. Now, this is what I'm seeing on the daily chart for the SPY. A very nice move. This was a great move, a great January, one of the best Januaries since 2001, I believe. So we saw that big move, but things got a little extended. All right. It came right into this red area here. This red area is showing you a lot of times where it was support and then it was resistance over and over again. All right, same thing here. Gapped over it, came back, just simply could not break out of this. Before this area, the area that everyone was looking at was that 410 area. We broke out of that, came back down. Now, if we do continue up at all this week, what I see here is I see this gap fill up to 421. So around 420, 421, this gap on the SPY has not been filled yet. A lot of times the market likes to fill those gaps. So we'll have to see. But if we do get up to this, I would be thinking that we're very extended and I would be looking to short. If we don't break this level, this could be the start to a pullback. Now, a pullback, if it breaks 410, I would look at, down here about 402, this 401 area where the 20 EMA is for a possible bounce. But the market since October, it's still trending higher. But for the year, we're still trending lower. Until price breaks this pivot high here, it's still in a downtrend. So keep that in mind. All right, that's on the SPY. On the Qs. All right, on the Qs, this is something that I noticed. I posted this, I believe, on Twitter yesterday. So we had a summer rally in the Qs, and then we've had a rally here to start. These rallies that you see here with the white line, they're 20% rallies from the bottom. 20% from the bottom to the top. We saw back in 2000, 2001, 2002, when the Qs, right, the NASDAQ market, when it was in a bubble, when valuations were very high, it had a bunch of these 20% rallies. And then they came on back. So just keep that in mind. But something that I really like here, and I'm just going to remove this. This trend line is an interesting one. It's touched multiple times, broke out over it, and then came back down and saw a bit of a bounce off of there, but then pulled back. You can see here, I mean, that's a big pullback intraday. So just keep this in mind. There's a trend line here, but the gap to fill is really right down here that has not been filled yet. So if we come down, we break this, we have 303.30, let's call it. If that ends up breaking, then you can have that psych level of 300, and then you possibly have the 200 SMA here. One other thing I want to show you. So that's the Qs, but we were very overbought. Like I said, the most overbought we've been in over a year. So that's why I got into those puts. We're still overbought, but it doesn't mean that we can't just bounce around here for a little bit unless we just gap down on Monday. But what I wanted to show you guys on the SPY before I forget, we started to see that it's called the golden cross. So anytime this 50, right? So what we saw was the death cross at the beginning of last year. When the 50 crosses under, the longer term moving average, the 200. What we're starting to see here is the 50 crossing over the 200. All right, so if we zoom in here, right here, this is the start of that golden cross. A golden cross means that maybe the bottom was in and we're starting to get a little bit better price action. And, you know, it's a more bullish sign for the market. Now the 200 is still sloping down. So we're going to want to see that 200 start to flatten out a little bit. And it's just going to all be determined how the market trades. If the market pulls on back really quick, then it's just not going to, they'll start to flatten out more. But this is the start here of something decent, suggesting, all right, we saw the death cross here. We got really wide with our indicators, and we did see that nice sell-off, but maybe we have that bottoming process, at least, you know, starting and in place. Now, will the 360 area be tested again? It's definitely possible. It's something that I believe is possible to happen, or even the 380 area. It's definitely possible, but we're just going to have to just trade what's in front of us and not try to develop that bias, all right, ahead of time. So that's the SPY. We went over the Qs. Let's look here at the Dow Jones. All right, so, you know, basically with the Dow, nothing crazy is going on. Still the exact same lines that I have from last week. We're still in that, all right? We're still in this wedge right here. Overall, the major moving averages, which is good. It's good that we had that golden cross back here. And the market and the Dow has been, you know, holding up pretty decent as, you know, compared to all the other ones. But it hasn't moved as high as the other ones because the Dow is already up here from where we were a year ago. So it's held up decent, but we haven't seen this year a real breakout yet of the Dow. So that's the DIA. Nothing else much crazy to talk about there. IWM had a nice breakout of a really tough area here that we simply could not break. Now, right here, we had our June lows, and then in October, we never broke that. That's really bullish. That's a very bullish sign for those small cap stocks. And then we saw that continuation. This is just a bearish to bullish reversal. All right. But now, again, the IWM is extended. What I am expecting is the market to pull on back. A market doesn't just go straight up forever. There will be times where it tends to pull on back a little bit. And the Russell, this tends to really trade in a range. So if we look here, let's go out 3 years. You can see last year, 2 years ago, it traded in a very specific range. And then this past year, traded in a specific range. Let's see what it does this year. Are we topping out here? Are we going to go up a little bit more to maybe the 210? Or is this 200 level where we'll top out? And then we'll pull on back and we'll start to trade in a range. So we'll just have to wait and see on the IWM. Those are all those small caps. But RSI is still showing overbought. I don't want to be a buyer here at this point. So that's the IWM. Now, let's go into some of those stocks that we're looking at, right? Let's start with Apple, right? Might as well start with Apple. Apple on the daily chart had a huge move. Very solid move off the 200 moving average here. Now, it is extended. Keep in mind, when stocks are like this, the odds of a pullback in the market is going to be way more likely. All right, so just keep that in mind. That was a very nice bounce. And that's a bounce straight off the 200 moving average. That's why I have these on the chart. All right. But it came right up to this double top right here. So we'll see what happens. We'll see what this week shows. But keep in mind that RSI is really, really overbought on Apple. And I'm seeing this a lot more on a lot of these tech stocks. So just keep that in mind. All right, a stock that has earnings this week. And this is a very nice, let's take a look at this on the one day. All right. 1 year worth of price action here. Again, saw a bottom in June, did not go lower in October, where a lot of stocks did. This one has held up. This is that bearish to bullish reversal. This is looking really good. If it can break this 34, 35 area, it's looking like it wants to go higher. Just by this daily chart, this looks like it wants to break on higher. Again, we have this issue here with the RSI. The RSI is hot at this moment. So we'll just have to keep that in mind. We do have earnings over here, I think, on Wednesday. But these are the types of charts you want to look at, where something hit June lows and didn't go lower in October and started to break out. Broke out of this trend line, and now it's looking like it wants to go higher. All right, but you will have, a lot of overhead resistance. A lot of volume was done up here. But just keep that in mind. I do like Uber. I just don't like that it's so overbought at the moment, but you have earnings. So that could give you a decent play there. All right, so that's Uber. We looked at Apple. Something that I wanted to show you, because this is something we had on our last couple weekly watch lists, stocks to watch. This is a sector. This is the energy sector. I called out here the triple top, and we did see a really, really solid pullback. All right. So if this one pulls back to this 84, 83 area, I would be looking to get into calls. Or you could even get into puts here to see if it goes lower. But energy, which was an outperformer, has not outperformed on the year. All right. And if the economy is strong and demand is strong and China's reopening, you would think that it would be good for these energy stocks. All right. So that's the XLE, something on watch. We took puts up here and had a very nice move. All right. I still think there's some more room to go here. It's possible that we can pull on back to previous support, but just keep that in mind. Now, I wanted to look at gold. I was really, really liking this move on gold. This is also a nice bottoming right here into a breakout of a key level. You can see, this is a very key level here for gold. Now, this is just a gold miner. This is Barrick Gold, but it's going to go with, obviously, all the other metals, all the other gold stocks, gold in general. And this is a really big pullback. A really big pullback. So what I have, because I see here, I see a nice golden cross, right? I see something coming down to the 50 moving average, coming down to support. I have an alert set to get long gold. That's what I'm looking for. I'm looking to get long gold. All right. Let's take a look at mRNA. I have on the charts. Very clear bottom here. But, something that I can tell on the daily chart, I don't know if you guys can also see this. It's not the best looking head and shoulders, but it does look like we have a head here. Now, this gap up day, this was just on some news. So I don't really care too much about this one candle. It's like I said, it's not the best head and shoulders. You got a shoulder, a head, and the other shoulder. And now you're coming back down to this neckline. It's possible that we can see some further weakness. You can see with these candles, that the market really doesn't know what it wants to do with mRNA. This is a stock that can trade on momentum. So whichever way it goes, if it does break down, I would be looking to continue that breakdown with puts. All right. And this head and shoulders would be validated if this continues to come on down. So it's just another chart to watch for you guys. I think that's gonna wrap it up right here. So I hope that you enjoyed the video. If you have any questions at all, leave them down below in the comment section. I answer every single comment. All right. I'll see you guys back on the next one. Take care, guys.